Hey, all you cute cats and kittens, this is Aaron Brown, and we are live. We aren't live? This is getting edited? No, okay. Hey guys, what's up? I'm Aaron Brown with Ben Franklin Insurance, and I know things. This is an edition of What Is Up Insurance. Thanks to the insane amount of boredom you are all going through, thanks to quarantine, you chose to watch a video on insurance. On today's What Is Up Insurance, I want to touch on one topic that comes up all the time, but never at the right time, and that's the co-insurance clause. Wait, don't go. Before you hit that little X, just listen to the next 10 seconds. The co-insurance clause on your property policy is actually very important and dramatically can change how much the insurance company will actually pay you at claim time. I'm talking tens or even hundreds of thousands of dollars difference. Are you still watching? Also, the co-insurance clause is on almost every single one of your property policies, including your homeowners. So this topic is really relevant to everyone, including you. So if I've earned your attention a little longer, I'll give you a brief consultation on your insurance policy that could really save your adjuster and you some grief. So here we go. What is the co-insurance on your property policy? Quite simply, it's the percentage of your property value that you are required to carry. Pretty simple, right? So what happens if you don't have at least that amount of coverage? Well, then you get hosed, and you potentially get hosed really bad. Why? Because there's another word added to your policy next to coinsurance, and that word is penalty. So what's the penalty? Well, it's an equation that goes like this. What your coverage is divided by what your coverage should have been equals... For those of you still following along, see this equation below? This matters a lot. Because insurance companies add this clause in an effort to make sure that you're carrying enough insurance, and that's a good thing. So for the purpose of this video, I've done the blah blah math for you with a calculator.
Glenn, guess what we're getting for Christmas?
Yeah, a calculator.
We're getting a calculator.
Yeah, that's great.
I'll run through a quick real-life insurance oops moment so you can see how important the co-insurance penalty really is. So, you've opened a Tiger Park, and the gift shop building cost $300,000 to build, but you bought it for $175,000, so that's what you think you need to have it insured for. Wrong. Your policy says you have to have 80% of that $300,000, and that number equates to $240,000. So Mother Nature, aka Carol Baskins, comes along and takes a huge dump of hail on your roof, and you're told it'll cost $25,000 to fix. Due to the co-insurance penalty, you're only going to get $18,250, and they also reduce your deductible. That's over $7,000 you will not get towards your roof repair. Get it? So what can you do to prevent this? Well, there are a few options, and I'll go over each of these options for you in the upcoming videos. The good news is it can be prevented. If you'd like a more detailed explanation and some simple math examples of today's video, you can visit our agency website at www.benfranklinii.com. Again, my name is Aaron Brown with Ben Franklin Insurance, and I truly appreciate your tuning in. See you next time for another What Is Up Insurance video.